This case reminds me of the story of David and Goliath, with a difference. Goliath is winning all along the line. David has sought to find some stones in the brook called the Industrial Relations Act 1971, but every one of them has so far bounced off the invisible Goliath. This is a quote from the Master of the Rolls at the time in the United Kingdom, Lord Denning, in a case called Post Office and Crouch. I can make a podcast on this case if you wish, but today I'm going into more salacious stories. So I trust they empower and provoke engaging investments or divestments. English is not my first language, and welcome to the new season of Viral Laws. In previous episodes, we've confronted some sobering realities, yet as certain as death shadows every life, so too do taxes trace every transaction. This is Viral Laws, where public scandal meets private legal complexity, and where headlines are just the starting point. Today we enter the world of Hollywood litigation. As reported by TMZ, actress Blake Lively has filed a lawsuit against her It Ends With Us co-star and director Justin Baldoni, alleging a series of disturbing on-set behaviors that caused her severe emotional distress. But beyond the tabloid buzz, this case opens up a deeper legal debate. How does the tax system classify harm? Tax expert Robert R. Wood explains that reputational damages may, under certain conditions, be taxed as capital gains, far more favorable than ordinary income tax. But emotional distress, that remains taxable unless tied to physical injury under Section 104 of the U.S. Tax Code, a distinction that haunts nearly every sexual harassment settlement. So, in this episode of Who Deserves the Taxes, we peel back the legal layers beneath celebrity headlines and examine how the evolving value of personal reputation challenges long-standing tax doctrine. In the courtroom, as in the old tale of David and Goliath, the battle isn't always about who throws the stone. It's about which rulebook decides the outcome. Blake Lively's lawsuit isn't just tabloid fodder. It's a front row seat to how US tax law passes emotional harm, reputational damage, and the economics of modern celebrity. Now, this isn't just another celebrity headline. This is a masterclass in how fame intersects with wealth structuring and the hidden legal levers that ultra-wealthy pull behind the scenes. Whether you're managing a multinational business, investing across borders, or simply interested in the elegant dance between fame and finance, this one's for you. When celebrities like Baldoni and Lively make bold financial or business moves, especially ones involving production companies, intellectual property, or new revenue channels, the smart question isn't, what are they doing? It's why now? Let's start with timing. In the US and increasingly worldwide, governments are cracking down on loopholes that were once used by high net worth individuals to shield wealth. There's talk of wealth taxes, increased IRS scrutiny, and international enforcement of digital royalties and cross-border licensing. So if you're launching or repositioning a personal brand empire, now is the time to think very carefully about how it's structured. That's what Lively and Baldoni may be doing, moving assets like future film earnings or trademarks into vehicles like LLCs, trusts, or offshore holding companies. The timing hints at long-term tax optimization. Here's the first legal red flag, or perhaps green flag, depending on your perspective. Both Lively and Baldoni are actors, but they are also brands. If they're transferring their likeness rights, social media value, or even upcoming film production roles into a holding entity, they may be doing something very sophisticated, converting personal labor income into corporate asset value. Why does this matter? Because in most countries, including the United States, personal income can be taxed up to 40% or higher, but corporate income, especially passive income from IP, can be taxed at far lower rates. And if that income flows through international IP hubs like Ireland, Luxembourg, or the Cayman Islands, you can structure for deferral or exemption. This raises a global question. Should IP-rich individuals be taxed more like entrepreneurs than employees? It's a legal grey zone, and one the wealthy have mastered. Let's go one layer deeper. Estate planning. Blake Lively is married to Ryan Reynolds, who's not just a star but a serial investor. If their shared IP rights are now moving into long-term structures like Delaware Dynasty Trusts or Nevada Asset Protection Trusts, they may be preparing for a multi-generational tax shield. In jurisdictions like the United States, South Africa, and the UK, the structure of your will, trust, or foundation affects everything, from inheritance taxes to the public visibility of your wealth. For international families, this is key. If your children inherit a valuable film company or brand, will they face 40% estate taxes, or will they inherit units in a trust, free from probate and largely tax deferred. This is the elite strategy: protect now, distribute later. But tax planning is no longer just a financial game, it's a reputation game. In 2025, transparency is the new secrecy. If Baldoni or Lively move too aggressively, say by parking royalties offshore, they could trigger not only audits, but also headlines. That's where ESG law and responsible tax principles come in. Many wealthy families are now applying sustainability principles to their legal structures. They are asking, is this tax structure legally sound and socially acceptable? Could this arrangement withstand not just audit, but public scrutiny? This is why top-tier legal advisors are now combining tax, PR, and governance strategy. Because one bad article can cost more than one bad audit. So what can we learn from the quiet, potentially calculated moves of Baldoni and Lively? It's this: wealthy don't just earn, they structure. They anticipate the tax code, not react to it. They think like asset managers, not just artists. And they don't wait for wealth to arrive before planning its protection. The question is, are you? For more on structuring global wealth and navigating the legal grey zones between reputation, tax, and strategy, follow or reach out. Your future net worth may depend on your next legal decision. Quite like that, actually.